Welcome to our comprehensive overview of the advanced compensation, benefits, and total rewards model for Pakistan's corporate sector in the fiscal year 2025 to 26. This presentation outlines a robust framework tailored for PSX-listed public limited companies, integrating the latest statutory requirements from the Finance Act 2025, FBR tax slabs, and labor laws like EOBI and the Standing Orders Ordinance. On this title page, you can see our color coding guide and a roadmap of the workbook navigation, ranging from parameters and pay bands to our executive dashboard. This model ensures that HR and finance teams remain fully compliant while managing complex total reward structures effectively. Let's start with the heart of the model, the parameters and global settings. This master control panel is pre-configured for Anglo Corporation as a baseline, but it's designed for flexibility. We've updated the FBR income tax slabs for salaried persons according to the Finance Act 2025, including the new 9% surcharge for high earners. You'll also notice significant updates for the upcoming year, such as the revised minimum wage of 40,000 rupees in most provinces and the corresponding adjustments to EOBI and SESI contributions. These settings dictate the logic for the entire workbook, ensuring that every calculation reflects current provincial and federal mandates. Moving to the employee roster, we have our master database. This view provides a bird's-eye perspective of the workforce, from the CEO to junior executives. It doesn't just list names and departments, it calculates live annual gross CTC, benefits valuation, and estimated net take-home pay for each individual. A critical feature here is the comp ratio column and the status flags. Currently, we can see several below-band warnings, indicating that current pay levels for many senior roles are lagging behind our established midpoints, which serves as an immediate signal for HR intervention during merit cycles. Now, let's break down the monthly salary structure. In the Pakistani market, a package is much more than just a basic salary. We typically see a structure where the basic salary is complemented by house rent allowance at 45%, and conveyance, medical, and utility allowances at 10% each. This granular view shows exactly how a monthly gross is calculated for every employee and provides an estimated monthly net pay after all statutory deductions. This level of detail is essential for transparent payroll processing and for answering employee queries about their monthly bank credits. Our pay band architecture establishes the grade hierarchy from G1 to the managing director level. This slide visualizes the annual basic salary spreads, utilizing a 60% range spread and an 18% midpoint progression. By plotting actual salaries against these bands, we can see the green zone of 90% to 110% comp ratio. As noted earlier, the majority of our current averages are trending below the midpoint, which suggests that as a PSX-listed PLC, we may need to review our competitive positioning to avoid losing top-tier talent to the market. The annual performance bonus or short-term incentive model is driven by both company performance and individual ratings. We use performance gates, revenue, EBITDA, and EPS, to determine the overall funding of the bonus pool. For FY 2025 to 26, our effective company funding stands at 93%. This is then multiplied by an individual's performance rating, ranging from does not meet to outstanding. This dual-factor approach ensures that rewards are only distributed when the business succeeds, while still recognizing high individual contributors. Benefits valuation is often the hidden part of compensation. This slide quantifies both statutory and non-statutory employer costs. Beyond the basic salary, the employer incurs significant costs for EOBI, Social Security, and the mandatory gratuity accrual. When you factor in group life insurance, medical OPD, hospitalization, and the value of leave encashment, the benefits loading reaches approximately 43% of the gross salary. Understanding this total cost per employee is vital for accurate financial forecasting and budgeting. The FBR income tax calculator is fully updated for the Finance Act 2025. It automatically applies the new slabs, including the 1% relief for lower earners and the 9% surcharge for those earning over 10 million rupees annually. The model intelligently accounts for exemptions, such as medical allowance up to 10% of basic and a provident fund employer contribution limits. This ensures that the withholding tax we deduct at source is precise, minimizing year-end reconciliation issues for our employees during their tax filings. For senior leadership, long-term incentives are key. This model supports equity and LTI schemes like ESOPs and SARs listed on the Pakistan Stock Exchange. It tracks grant prices against current fair market value and calculates the intrinsic value and annual expense for the company. We've also integrated the specific tax treatments under Section 14 of the Income Tax Ordinance, identifying when a perquisite is taxable during the 3-year vesting period and how capital gains tax applies upon disposal. How do we compare to the rest of Pakistan? Our market pay benchmarking compares internal salaries against surveys from Korn Ferry, Mercer, and ORAF. The data shows a significant cost to market. Most of our grades are currently positioned below the P25 or 25th percentile, largely due to the high inflation environment of 20 to 25%. To reach the market median or P50, we estimate a necessary investment of over 13 million rupees. This slide is a compelling call to action for the Board Remuneration Committee. The People Cost Budget for FY 2025-26 provides a month-by-month financial roadmap. It accounts for headcount changes, merit increase accruals, and variable pay. Most importantly, it highlights the statutory contributions line, which represents nearly 15 million rupees of the annual total. This structured budget allows the finance department to manage cash flow and ensures that HR is aligned with the company's fiscal constraints while fulfilling all legal obligations. The executive dashboard translates our complex data into actionable insights. We can quickly see that corporate affairs and finance are our highest cost departments, while also monitoring the total annual tax withholding of over 20 million rupees. With an average comp ratio of 0.82 across 22 employees, the dashboard makes it clear that while we are legally compliant with EOBI and SESI, our overall market competitiveness is an area that requires strategic focus in the coming year. This confidential total reward statement is designed for internal HR and finance use. It provides a complete 360-degree view of an individual's package, in this case, the CEO. It details the monthly salary structure, the tax analysis under the new slabs, and the full employer investment including benefits and statutory contributions. This document is essential for one-on-one salary reviews and for ensuring that the Remuneration Committee has all the facts regarding executive pay. Finally, we have the total compensation letter, which is the version distributed to the employee. It uses plain English explanations to help employees understand their FBR tax slab and the true value of their benefits, such as EOBI, gratuity, and medical coverage. By presenting the total annual employer investment rather than just a net salary figure, we improve employee engagement and help them appreciate the full scope of the rewards package Angro Corporation provides. This concludes our walkthrough of the model.